Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Russell Rhoads, Director of Research over at EQDerivatives. We're going to talk about some volatility trading trends. Russell, it's great to see you as always, although we have some competing Big Ten ideas with our respective institutions, but all joking aside, it's great to see you as always. Let's talk about VOLQ seasonality. We know what the month of January has packed in for us as we look towards the rest of the quarter. What are you looking at there?
Well, VOLQ, much like the implied volatility of individual stock options, does have an earnings seasonality to it. And I think in the next couple of days, we get all the top NDX components out of the way as far as earnings goes. And what you'll typically see after that happens is you'll see VOLQ fall to a discount relative to VIX, especially in the February to March timeframe. For some reason, those are the only 2 months that VOLQ on average closes lower than VIX. It's kind of a quiet time for tech stocks, and it shows up in the implied volatility of NDX option contracts.
So how do you trade this then, Russell?
Well, there are a couple of ways. First off, if you've got a directional opinion, and a lot of people have directional opinions these days, as volatile as the market has been, NDX options in February, March might be relatively cheap when compared to SPX options. So you may want to take a look there if you're thinking about buying an option contract. But in a more direct way, VOLQ futures have been listed at CME Group for a little while. A few weeks ago, they actually took the multiplier down from $1,000 to $100. And with that change came some nice volume. In fact, I think about 3,000 or 4,000 contracts actually traded last week. So if you take a look at maybe the February or March VOLQ future and compare it to the VIX future, there might be a spread trade to do there, especially with VOLQ at about a 2-point premium relative to VIX today. I do expect those two to change positions in the next week or two. And again, you can use the NDX options, or the VOLQ futures are actually doing some volume now, so you could probably look at that as well.
So you had mentioned that you saw the volume go up as the multiplier came down, which seems encouraging to me. What's the significance of that? Does that suggest more retail or financial advisor activity? Is it allowing a more broad investor base to participate in this?
It's including all of those things, but I think what it's allowing is, with a $1,000 multiplier, dipping your toe in the water might have seemed a little frightening. But with a $100 multiplier, both professionals and retail investors, it's a reasonable size for both. In fact, some of the trades that we see are like 10, 20, and 30 lots, which would be the same as trading 1, 2, or 3 back when they had the $1,000 multiplier. But the lower contract size, which really has been a trend for the last couple of years, hasn't it, has attracted some people to come in and actually start taking positions with the VOLQ futures.
All right. Russell, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.